Oh, you thought the run up to 10K would be easy, right? Sitting from 4K to 6K to 8K, and we're just going to continue to rise up, huh? Wrong. What's going on, everybody? It's your boy, Crypto Bobby. I hope you are having a great day, great night, wherever you're watching or listening in from. And today, a lot of interesting things to discuss, and I have a number of interviews coming later from Blockchain Week at Fluidity Summit that you're going to want to check out as well. But one of the big things to take a look at right now is, as you can see on Coin360, we are in the red, and it has been led by Bitcoin. And the thing about crypto that's interesting is when the market goes up, people yell scam, they yell manipulation. When the market goes down, people yell scam, they yell manipulation. Basically, whatever happens, people yell manipulation. And most of the times, it's BS, and it's just people being stupid and having no clue what's going on. In this case, it is worth diving into a little bit more because there is some interesting things that occurred last evening, at least for me, while I was sleeping, on Bitstamp that triggered a wild move in the cryptocurrency market that you need to take a look at, and also worth considering when you might be playing around with stop loss orders or potentially with leverage, because that is something that was heavily affected last evening. So we'll dive into all of that and more in today's discussion. So last night, the price of Bitcoin crashed about 18% on Bitstamp, which is a large crypto exchange that some of you might be trading on. The price crashed 18-20%. Why did that happen? Well, shout out to Loomdart, who is watching this in real time. He noticed that somebody had put up a 2,000 Bitcoin sell wall on Bitstamp, and it led almost immediately to the price of Bitcoin crashing from that 7,600 range all the way down to a low of $6,300, $6,400 or so. Now, why is this notable if it's just one exchange, right? You might be thinking, okay, it's just Bitstamp. Does that mean that it's happening on every other exchange? Well, the interesting thing about Bitstamp is that it is one of the exchanges that is utilized for the BitMEX XBT price index. Now, BitMEX, some of you might use it, some of you might love it, some of you might hate it and think it's the worst thing on the planet. But BitMEX right now is one of the most, if not the most important exchange and market in the cryptocurrency ecosystem because of how liquid it is and because of how much volume is driven on BitMEX. And 50%, that is right, 50% of the price for the price index for XBT, which is the trading instrument that BitMEX uses to replicate BTC, 50% of that comes from Bitstamp. The other 50% comes from Coinbase Pro. So if the price on Bitstamp is dropping due to somebody putting in a massive sell order, then that will be reflected. That will at least be 50% reflected in the index on BitMEX. So that is why that is incredibly important when you look at what happened with the price from Bitstamp. And that led to that massive sell-off of 18%. And also what occurred with that is you had a number of liquidations. You had a number of people that had orders on BitMEX that were leveraged up, and you had about $200 million worth of longs that were liquidated on BitMEX because of the cascading effect of this one very large 2,000 Bitcoin sell order that was placed on Bitstamp. So a lot of people love to kick, scream, and shout manipulation when it comes down to cryptocurrency. Most of the time, I don't necessarily think it is. This is actually a case where it looks pretty clearly like a sophisticated individual or organization with enough money in the bank to pull this off was able to successfully game Bitstamp and BitMEX. It's kind of confusing because you have two bits, but Bitstamp and BitMEX simultaneously to affect the market in a very significant way, eventually across all exchanges, because now all exchanges are down pretty substantially. So it is something where you have both BitMEX and Bitstamp really affecting how the rest of the markets will play out to a greater effect. And Suzu, shout out to Suzu, he did a fantastic job just summarizing kind of the situation as a whole. And he said, looks like a mark price exploit by placing a large sell, as we talked about, on Bitstamp, which is one of the two oracles, price oracles for the market on BitMEX to trigger liquidations on BitMEX. In effect, they ended up triggering $200 million of longs that got liquidated on BitMEX. And then he goes to show that you actually would have been fine if you were leveraged long on some other exchanges like Bitfinex, which actually didn't go below $6,000 or $7,000, whereas BitMEX went all the way down to $6,400. Now we're sitting above $7,000, sitting at about $7,100. But the interesting point to this, and shout out to Eric Connor for tweeting about this, and it's interesting, I think a lot of people might argue with this, but he says a whale crashes the entire crypto market 20% in 5 minutes with a single sell order on the books, and people think an ETF is actually coming. And it is a fantastic point, because when you look at what happens, you look at the argument right now for an ETF, and a lot of people say when ETF, and I literally sat in on a panel at Consensus where Jake Chervinsky was moderating, and there were a number of lawyers and regulators that were talking about when is an ETF coming, what is happening to perhaps insure an ETF, when will the time frame be, and a number of other components around the ETF. This is one of the biggest things that will likely prevent an ETF, not just the manipulation as a whole, but also the fact that in many ways BitMEX, which is an unregulated offshore cryptocurrency exchange, is one of the ones that really leads price discovery for the entire cryptocurrency market. The other day, Arthur tweeted out there was $10 billion in daily volume on BitMEX, which is insane. It's incredible. I think he tweeted that on the 12th. $10 billion in volume on BitMEX on the 12th. It is one of the most active, really the most active, and I think right now the most important for Bitcoin and for Ethereum in many respects exchange out there. I think you have BitMEX, then you have Binance, and then if you're looking at like quote unquote legit exchanges, maybe Coinbase Pro, but even then that still follows BitMEX. But when you look at that, and if you are a regulator and you see, okay, Bitcoin is becoming more legitimate, it's becoming maybe more regulated, and we want to offer a product on it, and then you say, oh wow, somebody just put in a 2,000 Bitcoin sell order and the entire market went down 20% basically in one quick wick. Like, what would that do for investors in the in the larger space? How would that look upon us if we create an ETF for that? And it probably wouldn't look too great. So something to consider when you are thinking about ETFs and when you look at something like this. Now, outside of the manipulation, or maybe it was, maybe it wasn't, who knows? But outside of what happened last night, I have a ton more content coming for you right now from the Fluidity Summit during Blockchain Week in New York. That is at the tail end right now, but it was a really great week. In summary, between Fluidity Summit, Consensus, I had a chance to speak on a panel there. There's ETH New York happening tonight. A lot of great conferences, a lot of great just people in general. The coolest part about Blockchain Week for me is not necessarily the conferences as a whole. It's just getting a chance to have a lot of individuals in the cryptocurrency space and the blockchain space in the same city at the same time, and getting a chance to just meet a lot of the people that you talk to online and hang out with, and see a lot of you individuals as well. So shout out to everybody who I got a chance to meet at Consensus and all those other places. But let's hop into the content from Fluidity Summit.
As somebody who's gotten a chance to use Dharma before, and a fan of what your team is building, for anybody who doesn't know, what is Dharma?
Yeah, of course. So Dharma is the easiest place to borrow and lend cryptocurrency. We essentially want people from anywhere in the world to be able to either borrow with a few clicks or lend and earn interest with a couple of clicks.
And one of the interesting things, you just had, I think Brendan, who is one of Dharma's co-founders, was speaking earlier and talked about the kind of three different waves or levels of adoption kind of. And right now, crypto native, and then there's kind of the extended period, and then at some point in time, looking for Dharma and similar types of products, maybe 10, 20 years out to kind of subsume legacy finance. How are you working on just making Dharma and the crypto ecosystem just more usable? Because I think you guys have done a really good job with user interface and the experience as well.
Yeah, totally. So usability and UX is a big focus for us. We don't think, we love DeFi, but we don't think new users are going to be able to kind of come in and be comfortable, let's say, sourcing funds from a decentralized exchange and then signing transactions on MetaMask. We think it's a bit difficult for them to do. So, things like Dharma Key, which we're essentially allowing users to sign transactions with a 4-digit PIN, just like they would any bank account. And similar to kind of the way we were thinking about it at Dharma is we think there are sort of concentric circles of users. You have your core DeFi enthusiasts, and then, moving kind of further up, you have, let's say, Coinbase users, people who signed up with an account. I think there's 30 million registered users. And we really do want to almost dumb down the experience and make something that they're comfortable with and they know how to use. So one thing we talk about a lot is dollar-denominated interest, right? You could lend DAI or USDC, which we're adding soon, right? So now anyone in the world can now earn interest on the dollar. And like Brendan said, we kind of see that as like almost that second phase where it's market expansionary, right? It's taking something that's relegated to DeFi now, but then making it kind of usable and understandable to a more general audience.
And with Dharma and what you're building, I think one of the things that a lot of people, and has brought Dharma a ton of, I think, users and also kind of money within its overall system, has been people looking for yield in the cryptocurrency space, and there has been solid yield on Dharma for products like DAI and things like that. Can you talk a little bit about just like how maybe the market has evolved to people seeking yield on places like Dharma?
Yeah, totally. So, I mean, yeah, so our interest rates right now, we are setting them and they're very much benchmarked to like the stability fee, right? And so Dharma's actually fulfilling like a core use case that multi-collateral DAI is supposed to have, and like a savings rate. And yeah, I mean, so in multi-collateral DAI, you're supposed to have a savings rate to essentially offset a high stability fee. So a higher fee would cause a higher rate and more people would buy, and that would kind of like bring the price back to $1. But that doesn't exist yet today, and so we've been lucky in that we can just charge a much higher interest rate and borrowers are willing to borrow. So lenders on the other side can earn 14% on the dollar. So we've kind of gotten lucky with timing. But yeah, like you said, like yields are going up just because there is no savings rate for DAI.
Yeah, it's been really fun to watch I think the competition in the like DeFi space in general between what you're building, what Compound is building. I think GetNuo is like a newer entrant into the market, and then obviously Maker. It's been fun to watch, and kind of everybody just like upping the game of everyone else. What's next for Dharma the next, like, say 6-12 months? Like, what are you guys really building towards?
Yeah, totally. So I'd say like more recent features, we're definitely going to be adding like USDC. We love DAI, we're big supporters of DAI, but definitely more institutional types, market makers, bigger trading firms are more comfortable with USDC. And I don't want to speak too soon, but Bitcoin will be coming to Dharma in some capacity, so look out for that.
Where are you doing venture investing, and why is blockchain a consideration there?
It's okay, so I'll answer your first question. Why do we invest in fintech and blockchain? So there's a lot of opportunity to disrupt the financial industry, and there's a lot of efficiencies that we could see that if applied within our company could create a lot of synergies and revenue growth and happier customers. That's why we're looking into this opportunity, especially with Fluidity Factora around. I'd like to learn what's out there, what's up and coming, and maybe something that we could share within the company that could help us look or consider other opportunities within the blockchain space.
Awesome. And as you've looked at, I think, maybe investments in the greater fintech space, but also maybe in the blockchain space, are there any specific areas or efficiencies that you feel like have potentially the greatest opportunity for disruption by this type of technology?
It will be the privacy area, because there's still lack of trust within transactions, especially in the commercial real estate space, secondaries, right? I think that's one. I'm sure in your world you'll have more, but that's one area I think that there's a great opportunity and a lot of appetite from the investors.
And I'm kind of curious of this because I just kind of like hearing it from somebody who comes from, sounds like a more traditional investing background. How have you been able to kind of learn and absorb the things that are thrown at you from the blockchain space? Because it's a very, I think, kind of different and unique landscape. Like, how have you kind of gone about learning and adding knowledge in that sector?
Yeah, so I'm very privileged that I came from another corporate venture firm prior to Fitch Ventures. And then simultaneously, I was studying at Yale University, wherein I was really involved with our FinTech club and the PVC club. So I was able to integrate my investor head, and the other one is the curiosity aspect of my life, which is, what is this? Can you explain it to me in layman's terms? And how does it apply to the use cases that I could apply to my current company that I work for? So that's how I get to learn this and realize how much this could bring, or how much value it could bring to the current system or the way we do business, basically.
And one of the things I think that has been really interesting, as somebody with, arguably the most prominent position in the decentralized trading ecosystem right now on Ethereum, is the research that came out recently with, I think it was Phil Diane from Cornell, talking about what is being called like Frontrunning 2.0. And you've had some interesting commentary as far as how IDEX is specifically built and how that helps to mitigate a lot of those issues. Would love your thoughts on just like the hybrid DEX model that you've taken and how it alleviates some of those issues.
Yeah, sure, absolutely. So one of the challenges when trading on a decentralized exchange is this idea of trade execution and what entities responsible for trade execution. If you think about trading, one of the things you want to be certain of is that when you show up and you try to buy an order, that if you're the first one there, you actually get that order, that someone else can't come at a later date and jump in front of you. That's the term front running. Whenever you're relying on a decentralized network, like the Ethereum network, to manage trade execution, you leave yourself open to the possibility of front running. So in this case, we've actually had what you correctly described, a hybrid approach, where we still use a smart contract to custody funds and settle trades. However, the trade execution is managed by us, IDEX. So when users authorize trades with their private key, it's first executed off-chain in our infrastructure. Another analogy is a state channel, where you're signing these messages off-chain and agreeing to these transactions and only going to the blockchain for final settlement. So the end goal is that we're able to keep the decentralized fund custody and trade authorization, where no funds can move without using your private key, but everything happens in real time and with certainty. You don't have that risk of front running.
Yeah, I think it's really interesting to watch the narrative develop and come to light, because I think there have been a lot of, some arguably some groups have thought like yourself have thought ahead of time of this issue, and I think some people have either kind of choose to ignore it in some respects or just downplay it. And it has been really interesting to see with the research that Phil and the rest of the folks at Cornell had done, getting mainstream press and Bloomberg and all these other places talking about this kind of like new generation of front running, what that's done, and how it's also kind of shown a light on this cottage industry of basically front-running trades on Ethereum that a lot of people didn't even know existed. So it's been really interesting to watch that develop.
Yeah, the report was really insightful. It was really cool to see some academic rigor behind it, right? And what you found was people were getting into a bidding war, paying higher and higher Ethereum gas prices to try to get these trades and front run them. And you're right, it's been interesting to see the evolution, because there's in some ways there's a philosophical kind of component to it of the level of decentralization. People say decentralized exchanges, but really there's a ton of different parts of the exchange that can be decentralized, and it's not a very precise term. And so in our case, we admittedly are taking some elements of centralization in order to solve this problem. So we, for example, people are unable to trade directly with our smart contract. You have to go through IDEX so that we can then coordinate these trades and prevent the front running. So now we've kind of addressed that issue, but we're now looking at other ways that we can make it more open and transparent to ensure users and give them the certainty that we're not doing anything malicious with the centralization that we do have.
Yeah, the point of different levels of decentralization, I think, is a really good one, because there are absolutely varying levels of decentralization, and having the quote unquote fully decentralized model doesn't always work the best, and often sometimes opens the consumer, the actual user, up to a variety of issues. So it's been interesting to watch that develop, and also just I think a lot of the conversation previously was around decentralized exchanges, and now some of that conversation is even shifting to just non-custodial, as long as the exchange isn't necessarily holding the keys, maybe we can categorize it in that way. So it's been fun to watch that narrative develop and kind of see how certain venues have adjusted things. What's next on the agenda for IDEX and for your greater team in the next 6 months to a year? What are you guys working on?
Yeah, thanks. So we got a couple cool things in the pipeline. So we think that in particular, this research and our user adoption has borne out the idea of this hybrid model, that it's a great approach to keep as you said, non-custodial, right? So the fund custody is decentralized, managed via users and a smart contract, but the other components are centralized for the performance and coordination benefits that it brings. One of the things we're looking at is how can we reduce the cost of using the Ethereum network for custody and settlement. So a fun fact, in 2018, Ethereum miners earned $148 million from gas fees, and IDEX users paid $4.4 million of those fees. It's a huge cost for using any decentralized application and an area that is a big focus of ours. So we're working on a layer 2 solution that will essentially change the way we send information to the blockchain so that we have to do it less frequently and with less information so that it's just a lot more cost effective to use the application. We're also working on a new UI and a new UX that's informed by working in this environment over the last year and a half. So there's in many ways our exchange is very similar to a centralized platform, but there's other things that are very unique just given the fact that all of your actions require approval from a private key. So we've got a lot of insights and feedback from customers that we're using and incorporating into this new design.
Great, that's awesome to hear. So many updates are coming on your end, and from I guess the perspective, and maybe this is just like a personal perspective, but when you are building these things out and all these different improvements and potentially kind of layer 2 state channel type of improvements to I guess kind of continually advance the user experience, any thoughts on what's happening with the improvement of Ethereum and kind of the roadmap of like Ethereum 2.0? Do you have anything specifically that you feel like might be advantageous to how you're building or to help out the user experience for people trading on IDEX?
Yeah, so in that respect, we're kind of doing a very focused layer 2 approach because we have a very specific use case, and that really helps in terms of honing in on the design and getting something to market relatively quickly. And then, once we get that, we're going to look at how can we generalize this a little bit more. It might have applicability for more projects or even for the Ethereum network itself. So, I think there's an argument to be made that layer 1 solutions should update extremely slowly and extremely carefully, especially now that there's billions of dollars of value on top of these networks, right? So, I hear the argument from many people within the Bitcoin community that if all Bitcoin ever is a kind of think of it like a shipping container layer for large settlement transactions and everything else is done in layer 2 or centralized solutions, then even that's an amazing innovation, right? To have this alternative reserve currency that can move large amounts of value around, even if there's the level of trust to get to the end user for that kind of last mile of digital value. So I think the same analogy could be made for Ethereum, and I think the work they're doing on layer 1 is fantastic, but I think a lot of the layer 2 stuff is progressing to the point where I hope a lot of applications will be similar to us, where we don't feel so kind of handcuffed or reliant on Ethereum itself.
Late 2017, early 18, a lot of people are talking about security tokens and like tokenizing the world, and there was this big expectation that it was going to maybe happen very quickly. And I think a lot of people, I don't know if they've lost interest, there's definitely still a lot of interest, but like maybe it just hasn't happened as quickly as some people were expecting. What do you think needs to happen for the more in-depth adoption of tokenized securities?
I would say that there are a couple of major barriers that exist in the market. First is lack of institutional trust, and the second, it's pretty closely connected. It's the lack of high-quality projects, because the main interest that we have seen...
deals.
high quality deals. So you need to get investors interested, but the majority of projects that we've seen tokenizing or going for SDOs were the ex-ICO startups. So quickly saw it as just a new opportunity for fundraising.
And for scam.
Well, there's an opinion like that. So we need to see a lot of high quality deals to see real businesses with profits tokenizing their equity or debt. And then we will see more institutional investors coming in. There are a lot of amazing guys out there creating the infrastructure for this to be able to happen, like Dave from Verzala, for example. But I think it will take maybe half a year or so.
I think we'll start seeing maybe the beginning of next year already, because we already see the first steps happening.
For example, in Germany, Volksraiffeisen Bank, their bank, they already issued 20 million euro tokenized debt.
Yeah, with Alpha Fluidity, there's also great infrastructure projects.
So big players are stepping in, they're kind of dipping their toes in this, but it just takes time.
I'm excited about Portis. It's something I hadn't heard of until pretty recently, maybe let's say a few months ago. It's something we're working with at AirSwap to integrate into the platform itself. And I think you guys solve a really interesting problem, and that is that Ethereum, cryptocurrency in general, but Ethereum is difficult to use. What's Portis doing to make Ethereum wallets go more mainstream?
That's a great question, and I'm going to say it's even beyond Ethereum. It's just blockchain in general. You know, if you look at Web 1 and Web 2 of internet and apps and mobile applications, if you ask the everyday user how the internet works, they can't answer that. And Portis is really focusing on the user experience for the everyday user, allowing them to be able to engage with the AirSwap or ETHFinex or even like a OpenSea, which is a marketplace for NFTs. So we created a platform where an individual comes to AirSwap if they've integrated our SDK, and they put their email and password in, and that encrypts the wallet with end-to-end encryption. And now they're able to use any dApp or DEX or trading platform without knowing they even just used blockchain to sign their transaction and engage in the market.
It's awesome, and it's something I've used, and I think it does like the primary experience for Ethereum right now seems to be MetaMask, or it's just the most adopted one. But it's still like, if you're not into crypto, MetaMask is confusing, but you've kind of replicated the system that people are just used to on the internet of having an email address and a password, and if you forget something, you know, you can reset your password. So I think it's a really interesting and kind of novel approach that will hopefully open up the door for a lot more people.
Yeah, one thing about resetting a password, we're non-custodial, so we can't actually reset passwords. But if they back up their private keys and or if they host on the cloud, whether it's going to be Google or iCloud, they'll be able to have their password saved. But yeah, MetaMask is a pain in the butt. If you ask anyone, listen, if you came out with instructions that says to use us, you need to download MetaMask, you need to use MetaMask, then you're going to be locked in on one device. That's a huge barrier to enter the market, as being able to use any device, any web browser, to be able to log in and use AirSwap.
Yeah. And it's funny that you bring that up too, because I think there's an infographic somewhere that has the steps that are required to utilize a dApp right now, and it's like, buy Ethereum on Coinbase, send that Ethereum somewhere, put it somewhere else, do this, do that, and it all kind of just jumbles together. And I don't know what this guy's doing over here, Crypto Man Ron.
Crypto Bobby, how are you?
Doing real well. I'll get you on a little bit. But I appreciate you coming on too, and I mean, as far as things to look forward to with Portis in the next 6 months, what are you guys building?
Actually, by the end of the month, we're releasing on mainnet, in partners with Tabookies, the gas station network. So any dApp that wants to sponsor the transaction fees, the gas fees, our gas relay will make it so any new user doesn't have to pay any transaction fees, and they can just come on board without having to pay any gas.